Good day, guys. How are we all doing? I hope we are all good. So I've been away for quite some time, but I'm now back and I should be posting consistently like we were doing before. So I hope you guys are still with us. Make sure your notifications are turned on and make sure you have subscribed if the content is making sense to you. So today we're going to touch on the Fibonacci. For those who've got our 2025 Advanced Day Trading Bootcamp course, you will find it on Module 7. So if you come to Module 7, you will see there is like a session there where we explain how to identify and trade trends using the Fibonacci. So basically what I'm coming with today is going to be like a quick example um of where you can actually use your Fibonacci tool to come up with the best entry option. So on our screens right now, we've got Boom 1000, a synthetic index. And just like before we put the Fibonacci, I just want to show you where we came with the bias and what made us then come to the lower time frame and now place our Fibonacci. So our Fib was actually on this particular day. So remember your Fib, you want to run it in the direction of where your trend is going. So I'm going to go to the daily chart so that I show you where this buying bias was coming from first, before we come back to the 1 hour time frame. So let's just clear this. Okay, so if we go to the daily chart, what you see is for the most part of the month of May, price was pushing down. We're literally pushing down from 1, 2, 3, 4. From the fifth day of the month, price was dropping, dropping, dropping until we hit this level here, which is 13,100. If you are in the WhatsApp community, I'm sure you've heard me speak of this level multiple times. 13,100 saying it's my point of interest, it's my point of interest. Right, so price hit this level. We did not get any impulsive push up. We came back, bounced on the same level again, then bounced on the same level for the third time. So, as a side note, or rather as a bonus point, remember each time before you take a trade, if you're going to be looking for buys, what you want to see is a sell side liquidity sweep. So basically what you want to identify is a swing buy pattern. You want price to come take out that last low, then come back into the range. That's basically what you are trying to look for. Once you identify this, then you can now come to your smaller time frames. In this example, we're going to switch from the daily straight to the H1 where we are going to come up with the setup. So what you will notice, like I said, is price comes, takes out this low from this daily candle. This is where our buy setup starts to form. But again, what's also making us buy is because of this impulsive leg, we are open to seeing price retrace. The same way price has been moving from our left-hand side, you can see we had a drop, a retracement. Again, this is a liquidity sweep opposite of the buy example which I showed you. So if you're selling again, you want to see price come take out something. Same applies here. We have an impulsive move retracement, a drop which does not take this one. So at this point, if price had done this, then we could have started looking for a retracement. But again, price just found resistance on the 50 EMA. Then we had this impulsive drop, which is what we are working with right now. So we are anticipating a retracement back into this broken level. So if you also notice here, I had put this Fibonacci as a sell. So from this lower high to this lower low, price created another lower low and another lower low. So if price is going to retrace, chances are will most likely retrace to at least around the 50% area or half of this impulsive move. Why that particular area? Because that's where we've got this level which was broken. We also have this fair value gap in here. So with that in mind, we now have a bullish bias. So anything which forms here has to make sense or align with what we want to anticipate here. So now going to the H1, All right, so on the H1, as I was stalking this asset, remember 13100 is in clear view, and that liquidity sweep, the sell side liquidity sweep on the daily is right here. Right, so what I want you to notice now is there is a double liquidity sweep. We've got this low, which was in line with the low of this particular day. So if you notice, I actually paid attention to this low here, liquidity sweep, price closed back into the range. So now I'm anticipating price to push to the next buy side liquidity. In this example, we had this high, we had this high, we had this high, we had this high. So if price is going to buy from this sell side liquidity, it's most likely going to push to any of these buy side liquidity points, which you now use as you take profits. So now remember, on the higher time frame, we are anticipating a much bigger move, which is where we now bring in the fib. So seeing that we had this selling trend, lower lows, lower highs, price now breaks the first lower high here. Soon as we get a break in structure, that's where you now bring in your fib. So we have a sell side liquidity sweep, otherwise highlighted by $3 signs. This is inspired by ICT, by the way. Once we identify liquidity sweep, we know that we're looking for longs. We get our impulsive push up. What's the next thing we want to do? We want to now place our fib. Remember, we're on the 1 hour. We drag our fib from the lowest price to the price point or the highest price point before we see a visible retracement. So that's here. Then we just map it out into the future. So now what we are waiting for is for price to retrace into either 38.2, 50.0, 61.8, 70.5. Also bearing in mind that 13100 is our POI, point of interest. So price finds the first support on this order block here, also finds support on the 50 EMA, then they push up but fail to break this order block. Keep that in mind. Second thing is price comes again and finds support on the same 50 EMA. So we do agree that price is finding support of 38.2. But then what are you going to use as a trader as an entry point or as an entry criteria? What you're now looking for, if you're following our sessions, is a nameable candle. You are looking for either a pin bar, a bullish engulfing, which has to be green. If we are buying, you're looking for an inside bar, which is engulfed by the candlestick to the left, or you are looking for a doji. These four candles have to appear on or near the 13 EMA. All right, so initially we had the bullish engulfing, which means when it closed, someone could have entered here. Again, where does your stop loss go? It has to go below your entry candle. So here, your stop loss would have been here. And if you're targeting 1:2, probably a TP would have been somewhere here, which is TP1 based off the fib. If you were patiently waiting for a session to begin, if you're using session timing, so this entry was actually early morning hours of yesterday. If you're waiting for a session during the London session, there was nothing. But during the New York session now, what do we have? Not only does price gives you a bounce off the 50 and a bounce off the 38.2 retracement level, we also get a bullish engulfing, which is immediately followed by a pin bar right on the 13 EMA. So remember, any of these things or confluences happening on the 13 EMA now makes you set up a high probability trade. So where do you want to enter? You want to enter soon as your nameable candle closes. Stop loss below the nameable candle, which means now if you had not entered here or here, now your entry is right here or anywhere in this area, or even a break of this order block. Stop loss goes below the pin bar or below the nameable candle. And again, you're aiming for a 1:1 or 1:2, or just using your fib tool to figure out where your TP1 and TP2 will be. So this is one example of a very high probability setup which happened. which was confirmed by the Fibonacci tool. So if you run your fib, your high probability setups are going to appear where your 13 EMA lines up with the OTE, or the optimal entry zone. So that's from 38.2 all the way to 70.5. If anything familiar happens in the zone, and if you've got your 13 EMA, especially the 13 and the nameable candle, then that makes your whole setup a high probability trade. So we already know that we're still bullish. So what would you want to anticipate here? So today is the 26th of May, and by the time this video is posted, it will most likely be the 1st of June. So now this will be your assignment to do a little back testing. So this first fib has played out. Now the next impulsive move, you can either pick this lower low to this high, then run your next fib there. Either that or this next low here and this high here. Both of these will more or less give you a zone to play with, or a zone to actually mark as your point of interest. So what I'm now anticipating is for price to now retrace, especially into the previous day's high, into today's open price. You can see both these price points are in line with these two optimal entry zones. That's number one. Number two, price can also respect this level here, which is slightly below the 50, or if the retracement is short, they can just respect the 38.2. Then from here, should we get any nameable candle, whether on the 38.2, 50.0, 61.8, or 70.5, we should start to look for a buy pattern. Basically, price can also do this. They might come, create this low, then push up, then come back, give us that liquidity sweep before they start expanding to the top side. Basically, we're looking for a pattern like this. But either way, should price respect the 13, or should the pattern form around 38.2, then we can also take longs. This is all inspired by our daily bias, which we are going to come back to right now. As you see, we're anticipating price to push all the way up into, let's just get the exact price point there. We're expecting price to run into about 13,700. Right now, we're trading around 13,400. So between where the current market price is and where we want to go, there is about 300 points or 300 pips. So out of those 300, should price move in our way, what we are looking forward to get basically is a piece of that pie. So should any buy setup form here, this is the piece of the pie. Wherever we decide to enter, what we're just trying to catch is a piece of this pie which we have here. So that's it from this session on Fibonacci. I hope this lesson was fruitful to you guys. If there's anything else you want us to discuss, please do write it in the comment section. Then I'll try to touch on it on the next videos which I'm going to post. We will also try to do a prop film series. Also, let me know if you guys would like to see that, where we'll get a prop account and do like a documentary series recording the trades taken, and see if we're going to pass it. But everything again will be posted. You guys should just let me know if you'd like to see that type of content. But after all is been said and done, this is an example of the fib. Should I come up with another example or just share it with you guys? So if you do have the course, please just watch the video on the course, then watch this one so that you can add onto your notes. For those who don't have the course already, please do get in touch. The course is available, mentorship is available as well, and we do have a WhatsApp community and a Telegram community which you can join and just get a glimpse of some of the setups we share, the trades we share. And we always also drop mentorship notes in those communities, so you can also take notes for those who are still learning. And if you've managed to watch until the end of this video, Thank you so much. If you haven't yet subscribed, please do subscribe, like, share, comment, and keep supporting the channel. Appreciate you. Good trading.